Good day, everybody. Still here. Daily Market Pulse for Monday, August 25th. We're nearing the end of a month. Then, of course, it'll be Labor Day weekend and things start over. We'll have a long weekend here coming up, so that'll be interesting to see how things transpire between now and Friday. If people are going to start considering selling, markets are a little on the high side. They may want to sell some into the long weekend, which sometimes can happen. We'll see if they do it before or into the weekend, or both, perhaps. Nonetheless, stocks higher today, mixed volume. The Nasdaq higher volume, S&P lower or lighter volume. Today, everything's still very strong. And on the robust side, let's see, that is Friday's candle. Let's see if we can get, there it is. So there's today. So there is the 17,000 mark. It held for one day, and then, or 2 days really. It closed above, went sideways one day is essentially what I'm trying to say. And then higher. Bollinger Bands are opening now, so room now to higher levels at 17,150 or possibly higher. Top of the channel at 17,2 and higher as well. 50 flat starting to rise, 20 starting to turn. 8 moving average now crossing the 50. So at this point, we're up. It looks to me like we're going to be nearing essentially resistance and or a place where they may want to take a pause. With the way the moving averages are, we're overbought. It's fairly extended. I would imagine you're going to want to take at least a little bit of a breather. So look for the sell signals, look for the candles. Right now, we actually have good strength in all the candles. Nothing that's going to signify us or tell us that things are going down as of just yet. But that upper shadow today might be an early warning signal. Thursdays and then Fridays sort of spinning top, and then now today's, while bullish still, may be giving us some clues of the possibilities that they may be looking to pause or at least take a little bit of a breather here going forward. So let's look at the S&P. The S&P had lighter volume as did the Dow. The same thing as the Dow, essentially a break of polarity, new high. Bollinger Band still opening, plenty of room to the upside. Looking for a 2,000 mark. It tagged over 2,000 today, then retreated off that just a little bit, but you see 1997.92. So this would be an area of target. It is overbought. Possibility of a negative divergence already starting. So you just keep a close eye whether this starts to fade below the gold line back toward the 8 moving average and more so the 50-day moving average as well. 1975 may act as a little bit of a pause because there's a window right there included. Mentioned Nasdaq had stronger volume. There's a Nasdaq rising window. That trend line may be a little off. There it is. That's probably a little bit better. So there is the target right in there, 1450, and then higher than that, 4600 approximately. You may still want to go. From the standpoint of measured moves, this could certainly go a little bit higher, but right now it may be at the top. You see the rising window. So right now 4550. Is that right? 4550 ends up being a support area. Below that, a polarity across the other windows of 4500 and then also 4485 are your support levels on the downside. Watch the 8 moving average as additional support. 20 and 50-day moving averages are stacked correctly, as is the 8 now, and they're all rising. So the strength is clearly there. A pullback, it could be an order, but look for a buy on the dip sort of situation on the Nasdaq, being as aggressive and as bullish as it appears and still is. The TSX, after a couple of days of a slight pause across the recent highs from July, is looking to go a little bit higher. Bollinger Band still opening, everything stacked correctly in terms of moving averages. Yes, overbought, but there's still room to go higher. But right now, negotiating 15,600 at the moment, with, as I said, room still to go higher with all moving averages still rising. The DAX is into the 9,500 level now with room to 96, I believe, is the next target. Everything looking strong. The 8 moving average now crossing over a declining 20-day moving average. At some point, there'll be a pause. 9,600 it seems like a reasonable place. It's a polarity plus the 50-day moving average is right there. A little bit of a scoop here on the US dollar, Canadian dollar, with resistance across 110. Bollinger Bands are starting to tighten with all this consolidation going sideways for the whole month of August. Low side is 108.75 to 108.50 almost, and 110 on the upside. That's the range you're currently in. More so, realistically, 109 to 110, just because the prime majority and primarily all the majority of all the lows essentially primarily are at 109. 8's rising, 20 rising, having crossed over the 200, which is also rising, 50 below, starting to rise or at least attempt to. So it's in a range. Needs to break 110 to go to 111. If not, then you're looking at a break below 109 to maybe go to 108, because that's the dollar range we had just spoken about. Euro US. Once it broke 133.50, it's gone lower, 133. It's still looking for about a 132 potential target on the downside. That's still very possible, with a resistance across 133 and a quarter to 133.50. Treasuries are going higher still after bouncing off 139 and some change and the 8 moving average. We've had 3 green candles now at this point, with a test likely of 141 and higher, to maybe shoot for 142 and possibly higher as well. Again, 139 is your polarity. If below that, you're going lower. But right now, it's in the channel. Everything trending higher. 8's up, 20's up, 50's up. Everything's very, very strong in the trend. You'd only believe it's going to go on the long side, which is odd because that's going up, as are the markets as well, which is not what you typically expect. Spinning top here on the Japanese yen after it faded right into our target of 96. So now I'm looking for the likelihood of a reversal here on the Japanese yen. It did not hold support originally. It's flushed aggressively, looking for support in the last few days. There's the green candle with the bounce. I'm looking for a stabilization across here with at least a bounce back toward 97. Maybe slightly lower than that, but essentially something on the way up into the 8 moving average perhaps initially. After that, we don't know. But some kind of a dead cat bounce of sorts. So we got the 1275 Harami formation off the gold candle, I believe. That's Friday's. It is. And then today was essentially sideways. It was just holding these levels fairly well. If they break down below 1275, it's all bets are off on the long side. You're going back to 1240. Otherwise, they're attempting base on Friday's candle in a mild, not really a confirmation today, but just at least sideways today, that they're going to try to bounce it back toward 1300 at a minimum. And silver just gliding down alongside its original trend line, and there's some support from 1950 into 19, so it's a 50-cent range that's currently in, but trying to hold overbought. Possible divergence, positive divergence here, possible, but looking for a little bit of a bounce back toward 20 and 2050 initially. Crude going sideways across 93. Anything below 93 you're looking much lower, like maybe 91 to 90. Otherwise, a bounce back toward 98 or 97 to 98 is what you'd be looking for there. Do the small caps. Risk on. It's gapped higher into the 116 mark, still room to 117 plus. Ultimately, we're looking at 120 to 121. 50 is flat. 8 is rising. The 20 is now starting to rise. So the strengths are getting there in terms of short term, but also the shorter intermediate trend. It's a fact that it's above the 50 is a good sign. If it can hold 116 to 115.50, then it has a much greater opportunity and chance to go into 117, 118, 119, 120. And I'll take you to the VIX. The VIX cross 1150 currently right now. A little bit of a green candle, almost Harami-like. If it doesn't hold 1150, you're going to 1050. Otherwise, this is, like I said, markets are kind of primed and ready for a little bit of a pullback. This is looking like things may be slowing down. There was an attempt on Thursday with that large upper shadow. It failed. Friday, a little bit of an upper shadow as well. It failed. So they're trying to create fear. They're trying to, or at least anticipate fear. And they're trying to push things higher. So 1150 needs to hold. For this to bounce higher, showing signs of fear, which means the markets pull back. If not, then you're looking at a very strong bullish run into the next level higher. If this starts to fade, there's literally no fear, and the markets are very bullish at that point.